What is going on, everyone? Welcome to another video. This one is going to be the part 2 of the fixing series. In this one, we will talk about the intermediate time frame, how to bring the daily buys into the lower time frames. So starting with the introduction here, now that we have understand how to mechanically find our daily buys, if you haven't checked my daily buys video, which is the part 1 of this series, be sure to check that out, because without that you can't continue this. So when we know our daily buys, and we expect one kind of buys, either an open low high close or open high low close daily candle. Either the daily candle is going higher or lower, there will be no conflict. Now we will bring that into the intermediate time frames. The first component we are starting with is the reversal confirmation. Every swing point on every time frame is a reversal on the aligned time frame. For example, if we have a daily swing point, that will be a reversal on the lower time frame, like hourly chart. The reversal candle on the daily chart will leave a V-shaped recovery or a reversal, which can be confirmed through the change in the state of delivery. This is the first component of the intermediate time frames. Now establish high or low of the day. This refers to the daily candles wick or intraday high or low. Why it is important when we have intraday low of the day or established low of the day, open low, we have a change in the state of delivery confirming that. Now we can trade the continuation higher away from that, and we won't be catching tops and bottoms. So it itself is a protected swing. A change in the state of delivery, price reaching into the previous day low or a key level, followed by a closure above. Now we can view this as a protected swing. So we can assume that the price must continue with fair value gaps or stop runs, but it can go here because it is a protected swing. Now how do we confirm and establish low or high of the day? For that, we are using the daily profiles. The daily profiles are the confirmation of the established high or low of the day. We have three types of daily profiles. The first one is the London reversal, which is that classic expansion day when from the daily open we are either consolidating or we are making that pulling run, taking the Asian session lows or highs if we are bearish. And then we have a change in the state of delivery. Now this is a London reversal, but this itself is an established low of the day. So in this case, if London reversal, then we are seeking New York continuation, because we are assuming this low won't be visited again. Now the New York reversal when the Asian session or the London session are consolidating, are making that opposing run, then the New York is tend to reverse the daily range higher. It oftentimes occurs with the drivers either at 30 and the forex and gold, and on the indices it oftentimes occurs with the 830 or 930, which is the equities open. So we are reversing the daily range. How do we confirm it? Same, the change in the state of delivery will be used for that, and we can see continuation entries, or we can trade the candle 3 after the reversal is established. Now overnight reversal, this is the lower probability one. This is when the price is reversing overnight due to some major economic news or something, or when we are making that opposing run within the previous day and confirming that within the current day the daily candle is starting expansion from the opening price. So it leaves a large change in the state of delivery. When we are consuming a large daily range overnight, oftentimes the London and New York are lower probability, but we can still see continuation entries if the daily candle still supports expansion. Now for our profiling, which is optional, it is similar to the daily profiles. I have two video guides about this. You can check them out. It's very interesting. Now you can treat a single 4-hour candle or two 4-hour candles as a session. When the one 4-hour candle acts as a reversal, the next one will expand according to the MMXM's next day model. Or you can use the T-Trace fractal model for this idea. For example, New York reversal, we have 18 candle, 22 candle, and 2M. These are kind of consolidating and creating small range candles. Then going into the New York session, we are reversing that up the London lows, and then we are expanding higher. So what does it mean? Inside the 6 AM 4-hour candle, which is 5 AM on the forex, you can also use like 17, 21, 1 AM, and 5 AM, which are weighted for the forex. You can check my video for that. Now we have two major news inside the 6 AM candle. If we are trading the Forex, our goal, we have R30 news inside this, which is tend to reverse the daily range within the 6 a.m. candle. Or if we trade the indices, we have the 9:30 equities open, which is upturn time reversing the daily range. So the 6 a.m. reversal confirmed a change in the state of delivery on the lower time frame. So it means we can seek the 10 a.m. continuation entries. When a single 6 a.m. candle is reversing, it is leaving that protected swing on the hourly time frame or even on the 15-minute time frame. So we can seek the next candle as a continuation. Now the London reversal, when 18 candle and 22 candle are making their opposing run, are consolidating, and when the 2 a.m. 4-hour candle is reversing, so it is leaving that same signature on the hourly chart or the 15-minute chart. So it means now we have a London reversal within the 2 a.m. candle, and we are seeking 6 a.m. or 10 a.m. continuation either on the hourly chart or on the 15-minute chart. Now overnight reversal, when the 18 candle or the 22 candle is creating that swing point, then the next session candles are expanding higher. This is the lower probability one. Using the 50% of the previous day's range, the previous day's like wick or body, this is important one. It suggests us many things, like for example, when we have reversal within the previous day, it created that wick on the lower time frame, V-shaped reversal. Now if our bias is true and the next candle is going to expand, it will leave an invalidation signature or a continuation signature, or it will print a large wick. How do we confirm it? From the daily open, we created a short wick respecting the 50% of the previous day's wick. Now we can assume that we have created short wick, the candle support expansion higher, and that is confirmed by the change in state of delivery, and now we can say that our bias is true and we can see continuation. If we are disrespecting the 50% of the previous day's range, closing below it, it means the price will reach for the previous day low and our bias is invalid. Or if we are wicking the 50% of previous day's range with large wicks, it means the daily candle still will expand higher, but it will not be an expansion candle because more time is consumed within the wick and less time will be left for the body to expand higher. Now the economic calendar, there are many doubts about the economic calendar. It is not something that you could predict price off of. When we have high impact rate for the news, it actually itself is a phase of price changer. When we are expanding before the news will be a retracement. We can expect that it is not a confirmation. If we are consolidating prior to the news will manipulate, but you still will be having that bias. If reversal is already in, then we can expect the continuation of a news, or sometimes the news could itself reverse the daily range. You can like act to that accordingly. Now the trading windows for the indices, I personally am trading post 9:30 because upon time when you have a protected swing that can be ran by the 9:30, and the 9:30 itself is providing opportunities for continuation and bias confirmation. So I'm always trading post 9:30, and for the forex and gold, I'm trading post 8:30 because there is no equities open. When we have a red folder news on 8:30, you can then trade continuation in your direction of the bias. And now for the 10 a.m. news, if you find entry prior to the 10 a.m. news, then you can hold through it. Now the strength analysis, this is common among the indices. The goal, when NQ leads, YM will lag and ES will be in between, and when YM is leading, then the NQ will be a slower or weaker and the ES will be in between. A bullish trade the strongest. For example, if the NQ is providing me a stronger bullish bias and the YM is lagging, so does the ES, so I can trade the NQ because it is the strongest asset. And if we have a bearish daily bias and the YM is leading, that will lead me to short the NQ because YM is kind of that confirmation for the NQ to go higher or lower. Now the tools that are used for the strength analysis is the SMT divergence, displacement, the reaction to the equities open or news. You can see it here in the schematics. We have the ES chart on the right and NQ on the left. So we confirm the daily low with the established low of the day, a London reversal kind of, and then we are expanding higher. You can look at the candle size. We have a change in the state of delivery. First, we have a short wick on the NQ. We have a long series of candles on the ES. It means the ES is lagging and the NQ closed above very aggressively with 3 large candles, and the ES kind of close above less aggressively, which indicates there is a weaker asset. Now we have a retracement phase. The NQ expanded again. Now we have a retracement phase. The ES also expanded but creating large wicks, and it is kind of lagging. And you can also check the low resistance liquidity are targets on the left side. If we are taking the previous day high faster on the NQ, then it means the NQ is the stronger asset. If we are taking that on the ES, it means the ES is the stronger asset, and same can be used for the YM. Now, high resistance liquidity run and low resistance liquidity run. On the intermediate time frame, you can use the previous day highs and previous day lows as our target. Failure swing also can be used. We are trading away from the high resistance liquidity run, which is a stop run, an inducement, and then we are trading towards the low resistance liquidity run. For example, this is an hourly chart. We have the session high stacked up and we are cutting through them. These are the low resistance liquidity run and failure swing. Why is it failure swing? Because if you look to the left, this high is not taken by this high. It is failing to take that high to it. So it is creating that failure swing. Now this high is failing to take this high. It is also creating low resistance liquidity run can be your target, and you will be trading away from high resistance liquidity run, which itself is a swing point and establish higher low of the day. And in this case, we have previous day highs and previous day lows is a stacked up drawn liquidity. Like we have a candle 2 closure and we have failure swing the previous day high, the day prior to that, and the day prior to that. These are all failure swing and we can cut through them. This helps us to confirm our bias. We will be trading towards the low resistance liquidity run from the high resistance liquidity run. Now the draw on liquidity reaction, this is the important one because many of you are trading after the draw on liquidity is reached, are trading the reversal and mistaking it with a continuation. So here are the schematics. When we are expanding to a drawn liquidity, we can either expect three things: either a consolidation and ending the day within that consolidation, reaching the drawn liquidity, consolidation, manipulation, followed by expansion again. For that, you have to wait for that bullish swing point. You want to be trading the continuation after reaching the drawn liquidity. In this case, we have a consolidation, a retracement into the fair value gap, followed by expansion higher. So this is a continuation after reaching the drawn liquidity. In the second case, we expanded towards the drawn liquidity, which is the previous day high or some failure swing. And what do? We expand higher, took that high, and then we expand lower. So there is kind of expansion met with expansion. Our expansion, consolidation, taking range high and expansion lower, that itself is a reversal signature. Now we will trade back towards the daily range. So you will wait for that next feather price delivery to confirm your narrative. Now the swing point selection, which is the important topic for this video. Now the swing point selection, which is the most doubted topic. With one-sided bias on the daily chart and establish high or low of the day, we can trade the continuation away in forms of swing point. For that, you have to wait for the driver to provide you that swing point because driver is oftentimes manipulating the price action. For the indices, I'm personally using 1 hour and 30-minute chart. 30-minute because the indices are fast. It can move quite a lot. So you have to align the 30-minute with the 3-minute chart to get those early entries. And for the Forex and gold, I'm using 1 hour to 5-minute standard time frame alignment, and the swing point can be formed inside a continuation leg. For example, we have established low of the day. It is important for the continuation entries, London reversal, then we expanded higher, a retracement followed by expansion. Now we have at 30 news, which is doing nothing, expansion. Now this is the next 4-hour candle or something. So we have that continuation signature inside a fair value gap, a swing point, and now we can trade the continuation away from that. And sometime it will be created by at 30 news. Like for example, at 30 will be manipulating the lows or tapping into fair value gap, and then we can trade the continuation afterwards. Now in this case, the New York reversal, we are consolidating, established low of the day within the equities open. The equities open manipulated the daily range and expanded higher. When we close above the consecutive series of down close candle, that confirms the change in the state of delivery. But if our narrative is to confirm, we can trade entries without the hourly change in the state of delivery and see continuation higher. In these cases, the equities open manipulated lower, expanded higher aggressively. So in this case, we can use a 30-minute time frame, which will divide this hourly candle into two segments. The first half will be the reversal, and we can trade after 9:30 continuation, or we can also seek the 10 a.m. continuation. Now, important note, if your daily bias is invalidated, you will not panic. You can also wait for the next day, and you don't tell your bias mid-session. Like for example, you have bullish bias for the day and the equities open manipulating lower and ripping lower, so you won't change your bias to bearish. It will be a manipulation or something, and eventually the daily candle will be expanding in its true direction, and it is okay to miss opportunities. Now we will hop into the charts and we will use all these concepts, how to bring your daily bias to the lower time frame, and using all these components to confirm your narrative on the intermediate time frame. And in the third video, we will be discussing the lower time frame entries, how to align your intermediate time frame with the 5-minute time frame and take entries on those. So let's hop into the trading view. So now here we are on the gold daily chart. First, we will mechanically define our daily bias using the component which we talked about in the previous video. So what does it look like? We have expansion, mid expansion, a change in the state of delivery and up close candle. Then we have expansion lower, followed by retracement into the internal range liquidity or a fair value gap. And then we are closing below the opposing candles. So the overall order flow or the bias is bearish, and we have a swing point supporting expansion lower. But what is the feather price delivery saying? We are in expansion, which is 1, 2, 3 or 4 continuous days of expansion. So we will wait for the next candle to reveal the next feather price delivery. Now with the Wednesday candle, which is the next candle, it took the previous candle's low and closed bullishly. So mechanically, now we have a candle 2 closure and expansion higher. Now we have to confirm that on the lower time frame with the change in the state of delivery. For that, we will drop down to the 1 hour time frame, and then we can see continuation entries higher. Now here on the lower time frame, you can see that we have printed the wick up the previous candle, and it was an expansion candle. From the open, it created a short wick and expanded higher. So what do we see here? We have a change in the state of delivery within this candle, consecutive series of down close candles taking the previous sales low and then expanding higher. So it confirms our bias that we are now bullish, and we can see continuation entries. And for that, what can we use? We can use intermediate time frame confirmation. If the next candle is supporting the 50% of the previous candle and it is creating the established low of the day, then we can seek the continuation entries. And one thing more, what do we have here? We have failure swings. This swing is failing to take this high, and these are bunch of failure swings, this and this right here, so we can target them as well. So now going into the next day, this is the 50% of the previous candle's range, and now we can use that for the continuation purpose. Where the price delivery we are in, we have equal highs on the top, and this is the Asian session. Now for the next candle to be bullish, it has to create a small wick followed by expansion higher. So the ideal situation here is this consolidation range low to be taken to create a short wick and then expand higher. Now in the Asian session, we have taken that low, and in this case we have created quite a large wick. We have from the daily open expanded lower to the 50% of previous day's range, created a large wick. If it is reversing from this point, so it would be considered a short wick, but since in this case we have created a long wick, and now we have a change in the state of delivery within the next day, and as a failure swing or a drawn liquidity, we have these equal highs which can be used for the target on this current day. Now what do we have here? After expansion, mid expansion, we have kind of consolidation, and this day ended up in a consolidation, not reaching the previous day high. So now we have the bias that we will use the 50% of the previous day's range because it is closing near the lows, and we would expect an open low high close or bullish expansion candle to these feather swing all equal highs. And now in this case, again, we have a large daily wick. From the opening price, we are expanding lower. We took the previous day low because it was a feather swing, and now for the established low of the day or confirmation of the daily profile, we need a closure above these consecutive series of down close candle to make it a London reversal. Now again, we failed to close above those feather swing, and the New York session at the 8 a.m. we have now taken that high once again with a large wick. So now we can target the current day high or the Asian session highs, because with a large wick our target can be small. After taking the previous day low, now we have closed above the consecutive series of down close candle. The established low of the day is confirmed, and now we can see continuation. And now on this day we had some sort of news, and we expanded higher through both up the liquidities, the Asian session high or the previous day high. So we can see them as a fair swing, equal highs. This high is failing to take that high, and this high is failing to take the Asian high. So after the change in the state of delivery on the hourly time frame, we expanded higher without providing any continuation opportunities. So now we have bullish daily candle closure, and also it is taking the previous day high. It is an order block on the daily time frame. Now we can see continuation in the next day. So this day ended up in a consolidation. Now from the daily open, we have unestablished high of the day. We have failure swings. Also, these liquidity on the left side kind of equal highs. Now, if we are creating a short wick or closing above these down close candles, that will be considered an expansion candle. Now we are consolidating between this range low and these range highs. Now this day ended up in a consolidation. How would we know? Because it didn't have that established low of the day to trade away from. So it took the previous day low, created a small wick, and now we can seek expansion entries higher. And this is also a fair value gap on the daily time frame. Now going into the Asian session, opposing run from the daily open, and now inside the Asian session, we have confirmed the established low of the day by the change in the state of delivery, consecutive series of down close candles. In this case, we will use the whole series, and now we have closed above it. So this is now a confirmed low of the day or established low of the day within the Asian session. And if we pull up the 4-hour chart, you can see the 22 or the 18 reversal. Now with the 4-hour chart, you can see that 18 candle took the 14 candle slow and expanded higher, confirming that is an Asian reversal. And now we can seek London and New York continuation accordingly. Now going into the London session, we retrace into this fair value gap and we are creating a swing point, not a quite a candle 2 closure. The price is now consolidating. Now in the London session at 3 a.m., what do we have? We expanded in the Asian session, consolidated, and then took this range low inside the fair value gap. And now we need a closure above this down close candle to confirm that is in London reversal or in London continuation. Now again, we haven't closed above the series of down close candles. Again, we have taken the London low. Now with this closure, we can assume this is a London reversal because after consolidation, it took that low again and now closed above the consecutive series of down close candles. In these cases, you can always seek the continuation entries on the hourly time frame and also trade the 1-hour time frame or trade this swing point on the lower time frames, which we will be going over in the next video. And now we have opposing run followed by a closure above, then opposing candle followed by a closure above again. So now we can view this as a propulsion block and we can see continuation entry in the New York session. So what this day has offered, when we have an Asian reversal, London and New York are tend to be lower probability because we consume much of the daily range within the Asian session. Then the London session consolidated and now it lost, it started expansion higher. Now going into the next day, we can still use the 50% of the previous day's range. And if we are creating a short wick, establish low of the day, then we can see continuation entries. Now the Asian session is creating a large wick, taking this relevant low. Now we need a closure above the consecutive series of down close candles. To view this is an established low of the day. Again, we manipulate that Asian session low. We are consolidating in the New York session. We have taken that low again. Now we need a closure above these down close candles to confirm this is a change in the state of delivery. In this case, we are respecting the 50% of the previous day's range, which is good for an expansion candle. And with this candle closure, this is now a confirmed low, a protected swing, and we can see continuation entries away from this to the previous day high or failure swing on the left side. And now we are expanding higher. We can see a 30-minute or 5-minute order block entry within that after this established low confirmation. Now we have ended up the daily candle. We had a large opposing run in the Asian session, which is consuming most of the daily range. So the London session was a consolidation. In the New York session was quite a continuation. Now for the next day to expand higher, we have to respect the 50% of the previous day's range. If it is creating a short wick after taking this low, which is relevant inside of fair value gap, then we can see continuation entries after the established low of the day. Consolidation, and now we have closed above the consecutive series of down close candle. We can view this as a change in the state of delivery or established low of the day. When we have SMT divergence at these cases, this can make it a high probability because this is not a V-shaped reversal we are wanting. We have a consolidation, kind of a breakout higher. And now the London session expanded higher. And it provided that entry opportunity down close candles into a fair value gap followed by closure above, and now we can see continuation entries higher. We also have a propulsion block. And here is a quick note: When we are creating a short daily wick, you can see from the Asian session, we tapped into this fair value gap followed by closure above. Then we have a large expansion because when we are not consuming the daily range within the early sessions, then we can expect continuation in the New York session and a large expansion. And when we are consuming the daily range within the Asian session, then we cannot expect an expansion candle, but rather a reversal candle to the previous day high or the current day high. Now going into the next day in the Asian session, if we are creating a bullish candle, then we can respect the 50% of the previous candle's range and create a short wick followed by expansion higher. From the Asian session, we have opposing run. This is quite a large expansion lower, but still we have a small daily wick. Now going into the London session, this is kind of consolidation. We do have closure above the down close candle. It isn't reaching into some point of interest and it is kind of a consolidation. So in these cases, we need a purge on this low again to confirm this is an established low of the day. And yeah, once again, we have taken that within the London session. Now we need a closure above this down close candle to confirm that is a change in the state of delivery to see continuation entry afterwards. And this 8 candle confirmed the established low of the day, down close candles followed by closure above. And we have failure swing, the Asian session high is our target. And we expanded through it. Now in these cases, you can see continuation entries are wait for the next feather price delivery. Upon reaching this high, we have expanded through it, failure to manipulate it. So now we can see a retracement into continuation, a consolidation, manipulation, or a continuation entries. In these cases, when we have a strong daily bias, we can use the hourly change in the state of delivery for the entries, entering above the next candle, putting stop loss below the bodies, and seeking to our entries on the hourly time frame. This will be a swing trade, or you can always seek a 30-minute or hourly swing point to continue higher. And also you can see that we have a New York reversal, also a same reversal in terms of the 4-hour profiles. So I'll show it right here. From the Asian session, we are expanding lower, creating that opposing run. Now this is the same candle, a reversal, and now we are seeking the 10M continuation higher. So this was an expansion day and is also taking this failure swing or the previous session high. Now going into the next day, since we are expanded too much, like 1, 2, 3 or 4 days of expansion, we can always expect a next feather price delivery. Now this was a very large range day. So after that, we can expect a new feather price delivery. If we are reversing, then we need a reversal, mid reversal to the downside. If we are continuing higher, then we need to take this low and then trading away from established low of the day. And as you can see in the Asian session, we had a consolidation upon reaching this low or taking this low inside this fair value gap. Now we have a closure above the consecutive series of down close candles and we started expansion higher. So you can confirm the daily candles intention by the lower time frames, change in the state of delivery, using the daily profiles, using the 50% of the previous candles range. These are the components you can use on the intermediate time frame to confirm your buys. Because when we said that the next candle will expand at daily chart, that doesn't mean that it will expand 100% of the time, but you can confirm that with the lower time frame signatures. Like in this case, we had a consolidation, manipulation, down close candles followed by closure above, a protected swing or established low of the day, and then we are continuing higher. Now we have a large Asian session, so we cannot expect London session or New York session to be a large range. And as you can see, the London was a consolidation because we consume most of our daily range within the Asian session. Now we have a manipulation of the consolidation range low. Now, if we are closing above these consecutive series of down close candles, then we can seek the never continuation entries. Now we have very slow closure above these down close candles and we are going into the next day. This is the bank holiday. It's not showing the daily candle on the indicator, but we have a consolidation type of scenario, a range high and a range low. So now in order for expansion higher, we need to take the range low to then expand higher or a breakout of this high. Or if we are reversing lower, then we need opposing run followed by opposing run lower, closure below this candle to then see continuation lower. And that idea is invalidated. We have broken out of this range with a large bullish candle. So now the Asian session expanded higher. Now in the London session, we have opposing run met with opposing run lower. So this is confirming this is a change in the state of delivery to the downside. So if the next candle is going to go lower, then we need to respect the 50% of the previous day's range, which in this case it is not showing, or we can use the 50% of the change in the state of delivery. If the current day is respecting that, then we will see continuation entries lower. If it is disrespecting that, then we need a close above these down close candles. But since we have failure swings to the downside, it would be awesome to create the next day's wick in this 50% and then trade lower. Now in this case, we reacted above 50% of the change in the state of delivery or the previous day's range. Now we need a closure below these down close candles for the next day to expand lower, and we have invalidated that idea. We have closed above these consecutive series of down close candles, and now we will seek expansion higher because it is breaking out of the range, not manipulating it, and we are still expanding higher in the newer session. Now going into the next day, what do we have here? We have a large expansion candle, about 5 to 6 days of expansion. We can always expect a next further price delivery, which can be confirmed through the lower time frame signatures. If we are expanding higher followed by expansion lower, then we will continue lower. If we are respecting the 50% of the previous day's range, then we will continue higher. In this case, we have opposing run followed by closure above, but it isn't reaching into some point of interest. We have still this fair swing lower. So this is not quite an established low of the day between the range high and the range low. So in order for expansion higher, we need to take the consolidation range low followed by expansion higher. And if we are expanding lower, then we need to take the consolidation range high followed by expansion lower. And now we have broken out of this range after taking the consolidation range high. We are failing to manipulate it, rather we are closing strongly above this. So this day also was an expansion day. We have an opposing run. If it is closing below these consecutive series of up close candles, so this will confirm that is a bearish reversal, and then we can seek the next day's continuation lower. Now going into the Asian session, we have closed below the consecutive series of up close candles. A change in the state of delivery, previous candles reversal. So this was the Asian reversal I was talking about. We have opposing run in the previous day followed by a closure below in the next day in the Asian session. If we are continuing lower, then we need a retracement followed by expansion lower, a new opposing run. Now after reaching the range low, we are kind of reacting higher. We need a closure above these down close candles to confirm that bullish bias or a bullish expansion higher, and this is now the current price section. So we are inside this fair value gap. In order for the reversal higher, we need a close above these down close candles. So the protective swing or established high or low of the day or the daily profile are protecting you from picking tops and bottom and trade confirmed entries. So if we are closing above these down close candles, we can see continuation to this high. If we are failing to do that and we are closing below these down close candle consecutive series, then we can see continuation lower. So from the looks of it, it is kind of a new phase of price delivery of a large expansion, mid expansion, reversal. Now it is reaching into the 50% of the change in the state of delivery, so we can see continuation entries lower. Or if it is invalidating that idea and closing above these down close candles, then we can see continuation entries. So this is just price signature to reveal itself. So this is how you can use the intermediate time frame to confirm your bias. The daily closure means nothing if we don't have the intermediate time frame perspective. Now for this example, we will start with the NQ daily chart with the current price section. So this is Friday 22nd of August, and we have a SMT divergence with this low on the YN. So we can view this as a protected swing. And mechanically, we have a candle 2 closure. Now this is the Friday's candle close, a very large closure. So we can always see continuation higher according to the mechanical swing point formation. So we have a bullish daily bias going into the day. We will only seek the bullish entries. So now dropping down to the 1 hour chart. Now going into the 1 hour chart, the first step is to confirm the reversal within the previous day. We have consecutive series of down close candles followed by a closure above, which confirmed the reversal within the previous day. And now we are seeking continuation with this current day. And ending the day, we have kind of a consolidation. So for the next day, which is the Monday, to expand, we need to respect the 50% of the previous day's range. We need to create the low of the day within this session, whether it's Asia, London, or New York, to confirm the established low of the day, the London, New York, or Asian reversal, so to then follow the continuation in the later sessions. So starting the day, we are in a consolidation and we have a big fair value gap to the downside. So ideally, we want to see a run below this and then followed by a closure above to then see continuation entries to the previous day high or more. And also we have feather swings on the left side in terms of the drawn liquidity. What do we have here? We are consolidating in between this range high and this range low in the Asian session. Now going into the London session, we are failing to take this low. Now we have manipulated that. So in order for the change in the state of delivery, we need a close above the consecutive series of down close candles. This is the small candle in the series, so I'm not using that. We need a closure above this. Now since we have a large opposing run in the Asian session and in the London session, now we need a change in the state of delivery to confirm that and seeking the previous day high entry or the current day's opening price. Because when we have a large daily wick, then the target can be the daily open or the current day high. Let me draw the candle formation for you. You have seen upturn time when we have a daily candle like this, a large range candle or reversal candle, we are closing near the highs or the opening price. So for that case, we can target the small objective. Now going into the newer session, I have told you in the PDF for the indices and the newer session, we are often reversing within the equities open. So this is the 9am candle. We have closed above this previous candle's high, which is confirming there is a change in the state of delivery or established low of the day. We have Asian and London opposing run, New York reversal, closing above the down close candle. Now we can see continuation entries, or we can enter up of the next candle, putting our stop loss below 50% of the wick, and we can target the opening price or slightly beyond that, or we can always seek the continuation on the lower time frames. Now the 10am candle expanded higher, and now we are ending up the daily range kind of retracing back because we reached the opening price of the candle. Now going into the next day, we are in a large consolidation. I don't really have a bias. If we are taking the previous day low, creating a sharp wick, then we can see continuation higher. Or if we are taking the consolidation range high, then we can see continuation lower. So in these cases, you have to print the next daily candle or wait for the price to reveal itself. Now going into the Asian session, we have taken the previous day low inside a fair value gap. Now we need a closure above this down close candle to confirm that it's an established low of the day. We aren't doing that, but we are consolidating in between. So this is now a new consolidation range. So in order for the expansion higher, we need to take the range high or the range low. Ideally, if we are trending higher into the range high, so this will be a protective swing. If we are manipulating again, then we will seek new entries. Now going into the newer session, the 930 created that swing point. So I have told you in the PDF that the swing point are created by news or the drivers. So the 930 created that swing point, expanded higher, closing above these opposing run. So now we can see continuation entries. And the price continued higher on the 13am. We created a new swing point for the new opportunities to this previous day's high. Now we are going into the next day, which is 26th of August. If we are expanding higher, so we need to respect the 50% of the previous day's range, create opposing run followed by closure above. This is opposing run, but I can't trust it as a daily low because it is not reaching a relevant level and it is sort of consolidation. Now we are consolidating Asian session, London made opposing run inside this fair value gap. If we are closing above the consecutive series of down close candles, so I can seek a continuation entries higher because it is respecting the 50% of the previous day's range and creating a short wick. Now going into the newer session, we haven't taken this high, which is fair swing to this one. So we expanded lower, our bias was bullish. So when we are entering the chart with one-sided bias, it will eventually turn in that direction. First, initially, we hit at 30, creating a swing point, leaving fair swing, expanding lower. So many up traders are shorting this because they think that opposing run means we are now bearish. But when we have a bullish daily bias, we can always expect a return back. Now the 930 candle created that opposing run and now it is kind of expanding higher. But since with the fair swing, we can expect a continuation to this high. So in these cases, you can take the 930 entries without the confirmation of the established low of the day. And if we drop down to a 30-minute chart, so we have a nice V-shaped reversal, 930 reversal, 10am continuation. So I was talking about this in the PDF. On the equities, the 930 can manipulate and expand. It can do both functions. So in this case, you can let reversal candle print on the 30-minute chart and then you can seek the continuation higher. Since we have fair swings to the high, so we can now seek continuation higher because these are kind of equal highs and we have still this high above that. and the price reaches into the previous day high, and now it is kind of retracing lower, and eventually it reached that high. Now this is the topic I was talking about in the PDF. Upon reaching the drawn liquidity, what further price delivery are we considering next? So we had a retracement, but it didn't reach this low, so it wasn't a valid retracement, sort of consolidation, taking this candle's high again and now expanding lower. So upon reaching the drawn liquidity, we are not continuing higher, but we are manipulating and making that V-shaped reversal. So now we can see continuation next day. Going into the next day, now we have a change in the state of delivery. Now in order for the next day to expand lower, it has to respect the 50% of the previous day's range, creating a short wick higher and then expand lower to these feather swings. Now going into the Asian session, we are kind of reaching lower, reaching higher. We are in between this large candle. We cannot expect something. Now you can see that the previous candle, which created second candle of the swing point, it changed the state of delivery. So you won't be going into the new day and shorting it from the start of the day or reaching for some fair value gap or something. You have to let the intermediate time frame give you the perspective, the narrative about what's going on. So we had a bearish expansion lower, a candle took lower on the daily chart. If we are continuing lower, then we have to create a small wick for creating established high of the day, then continuation lower. So in this case, what do we have? Reaching above the 50% of the change in state of delivery and the 50% of the previous day's range. So now we don't have a bias. The only drawn liquidity is the previous day high, and we reached to the previous day high in the newer session and validating the bearish bias idea. Now going into the next day, since we are closing above this down close candle, and also we have a change in the state of delivery in the previous day, consecutive series of down close candles, tagging this low followed by closure above, and now we can see continuation higher. So in order for the next day to expand higher, what do we want to see? We want to see it creating a short wick, respecting the 50% of the previous day's range, creating established low of the day to then see continuation higher. Now going into the London session, we have created a large opposing run, which is not a good indication for an expansion candle. And we once again have invalidated the idea of the bullish price. We have opposing run met with opposing run closing above these down close candles and then expansion lower. So 2 times we have invalidated the idea on the daily chart. We have expansion candle, change in the state of delivery. We disrespected the 50% of previous day's range and the newer session, and now we are continuing lower. So letting this stay close, what do we have now? We have opposing run met with opposing run, a reversal at the highs. We are closing below the previous candle's range. So mechanically, we can see continuation entries lower, respecting the 50% of the previous day's range. And we have the previous day low as our target. So we need opposing run followed by closure below, creating established high of the day to then expand lower. Now we have opposing run followed by closure below, creating the change in the state of delivery. Since this day is a bank holiday, we cannot expect a continuation lower, so we will skip it into the new day. And we reached that low in the London session, and now we are kind of consolidating in between. Now going into the next day, I don't really have a bias because we are inside the consolidation range high and the consolidation range low. So in order for the expansion higher, we need to take the range high, then creating established high of the day to then expand lower, or we need to take the range low, creating established low of the day to then trade higher. And we have taken the consolidation range low, but we are kind of breaking out of that. We are failing to manipulate this, so we will let this stay print. So what this day did was, after a consolidation range low is taken, now it's closed below that with a breakout. Now what do we have? We have a large daily wick, so we can use the 50% up it to trade higher because we have a reversal established within this day. Consecutive series of down close candles followed by closure above. This is the current price section, so I know there is an SMT divergence with the ES, so we can view this as a protected swing, and now we can see a continuation entries higher. So for the next day to expand higher, what do we need? We need an opposing run followed by a closure above, and then seeking continuation higher to this high and the current day high. Now going into the Asian session, if we are creating a bullish daily candle, we need opposing run followed by closure above to then see continuation higher. Since we are inside a fair value gap, we can see continuation away from this point if we are closing above these down close candles. Now we close above this down close candle, but this series is filthy, so I'm using this whole series is my change in the state of delivery. Opposing run, creating short wick, followed by a close above, a change in the state of delivery. Now going into the new session, I can only see continuation entries higher to this bank holiday high or the previous day high prior to that. So the whole idea of this video is when you have a one-sided bias, it makes things easy. And when you have a daily bias, that doesn't mean that you can short the next steady candle. You have to build that narrative, that lower time frame or intermediate time frame perspective to then trade the continuation higher. So what do we have? We have a reversal within the previous day. So in order for the next day to expand higher, it has to create a short wick followed by a close above and then seeking continuation entries higher. So this is the whole idea of this video, how to build your intermediate time frame perspective. Since we have closed above the consecutive series of down close candles, now we can see continuation entries higher in the new session. Now this is a good example how to not get fooled by the equities open or the driver. Since we have a bullish daily bias, we can use the 50% of the change in the state of delivery to go higher. Driver is printing lower, so that doesn't mean the driver has manipulated the previous candle's high. Now it will rip through the lows. Since we have a bullish daily bias from the 50% of the previous candle's range, now we are expecting a continuation higher. The daily candle will eventually turn bullish sooner or later. So the 930 manipulated lower, I still have expectation for a bullish bias because we are inside this fair value gap and 50% of the change in state of delivery. And as you can see, the 10 AM candle expanded higher, reaching bank holiday high. Now, upon reaching this high, what further price delivery can we expect? If we are consolidating, manipulating, then we can expect expansion higher. And if we are expanding and expanding lower, then this will be a reversal lower. And if we are consolidating and ending the day like a consolidation, we have three options. So letting the next candle print. So now with the next candle, what do we have? Expansion, mid expansion. If we are closing below these down close candle, then we will see bearish entries. Now we have closed below this up close candle, which is suggesting that now the order flow is shifting bearish. But since we have further swing above this high, we will skip into the next day. So now this is the next day's price section. After expansion higher, followed by expansion lower. Now we are expanding higher again. This is kind of creating that consolidation environment. We are in between the range high and the range low. So in order for the next day to expand higher, we need to take the consolidation range low followed by expansion higher, are breaking out of this range and then expanding higher. And now this is the current price section. So the whole idea of this video was to how to align the daily bias with the intermediate time frame perspectives. When we have a daily bias, how to confirm that on lower time frame when your bias is getting invalidated. So I've given you all the components in the PDF. And also in the third video, which is the last part, fixing your lower time frame, I will talk about the candle 2 entries and the candle 3 entries, how to choose a swing point, when not to trade. So we will combine the component from the previous video, this video, and we will add that to the lower time frame entries. And I will show you how to take the lower time frame entries, which is similar to the higher time frame. You need a protected swing and then continuation or blocks. So hope you guys have learned something from this video. Thank you guys for watching. Make sure to subscribe to the channel and like the video, and see you next week.